What's up, guys? A lot of you have been asking me about Nvidia, so I figured I would hop in, give you an update, talk about some flow that came through, and where I think this is headed in the next couple of weeks. I've been posting about Nvidia and how I think it's close to the top, or at least the breakout was going to be slowing down for a bit. Because over the past couple of weeks, you're going to see that while we're still in a bullish uptrend, the BX trender, which is this oscillator at the bottom, is showing lower highs and now moving into lower lows. This simply means that money is being pulled out of it. And this is normally when you see Wall Street start to kind of hand the bags over to retail. We make the joke in the industry that, no offense, your bartender, your barista, your hairdresser, everyday people know about the stock, are investing in the stock, and that's usually a sign of the top. Now, from a fundamental standpoint, I do believe in Nvidia and I'm very bullish on them, but we have to be objective as to what big money is doing because they're the ones who are moving the market. You are going to see here that on the weekly chart, like we said, we're in this bullish trend, but in most cases, when we see money coming out of this, we'll tend to bounce, make lower highs, and continue to pull our way down until we eventually move back at least into range of the market bias. In this case, I was expecting about 112 to $110, which is usually a very strong indication that the stock is going to break out soon. In the stock market, there are so many participants who are trading shares that it is very hard to actually find unusual buying patterns. People try to do it, they watch level 2, they use bookmap, but in the options market, when there's much less participants, it's a lot easier for you to actually spot unusual buying patterns. Another thing that you have to understand is that the options market is not going to directly affect the price of the stock. So if money is coming into Nvidia calls, it doesn't mean that the price of the stock has to run instantly. This usually allows you to get into a stock before a breakout happens. Now, in the case of Nvidia, on the daily, we are underneath the market bias, which is not a good sign. We do see here that we have a support level or a liquidity level right here at about $118 down to about $115. If I were to remove my indicators, we're going to know that this is a liquidity level because price bounces here way too perfectly. Now, the more times that we end up hitting these liquidity levels, the higher the chance that that liquidity level breaks. Once that liquidity level breaks, there's usually nothing stopping it from continuing its fall, especially through these thin areas here because there's so many gaps. That being said, we did have that buying come through today, and on the daily chart, the BX trender is making higher lows, which is usually a good sign that we're going to get a rally. And in this case, I think that that could happen. I mean, after hours, we are down a little bit, but I think that we could see this maybe push the rest of this week into next week up to about 124, 126, maybe even $128. This would most likely push us back into that range where we would end up rejecting to test this liquidity level once again to potentially see another bounce and failed rejection, or maybe just the pullback down to 106 or $104 as we expected before earnings in August. And I want to say all of this goes out the window if we just break through $128 and we see the BX trender close with a higher low. But until that happens, we are not bullish past $128. If you guys want to learn how to use these indicators and my two-step trading system, it requires you to only check the market every day from 3:30 to 4 p.m. and 1 hour on a Sunday. Check out our free market bias course and all of our other courses. Links are in the description. I'll see you guys tomorrow.